All right, welcome back. Let's get into what might be the most important catalyst of the week, the March U.S. jobs report. This dropped at 8:30 a.m. Eastern, and markets were watching it very closely because right now, everything we're seeing in crypto is being filtered through one question. What is the Fed going to do next? And this report, it directly feeds that answer. We're expecting somewhere around 150,000 to 175,000 jobs added, along with updates on unemployment and wage growth. Now, on the surface, that sounds like normal economic data. But in this market, this is fuel. Because if the data comes in hot, say over 200,000 jobs, that signals a strong economy, which means the Fed has less reason to cut rates. And that is not great for risk assets. That's where you could see Bitcoin continue to struggle and potentially push back down toward that $65,000 level again. But if the data comes in soft, weaker jobs, slowing growth, that gives the Fed room to pivot. And suddenly, rate cuts come back into the conversation. Liquidity expectations improve. And risk assets, they tend to respond very quickly. That's where you could see Bitcoin move back toward that $68,000, even $70,000 range. Now, zoom out for a second. This report doesn't exist in isolation. We've got Fed minutes coming on April 8th and a full FOMC meeting at the end of the month. So what happens today sets the tone for everything that follows. This is one of those moments where macro isn't just influencing crypto, it's driving it.